The defense sector, well, it's always right there where the geopolitical stakes are highest. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're doing a focused deep dive into Lockheed Martin, ticker LMT. We're using data captured on September 29, 2025. And the big question for you, the strategic investor, is this giant cleared for takeoff, massive gains, or is the market maybe already a bit too crowded?
Right. And if we look at the bigger picture, the macro environment, well, the market's broadly positive this morning. That's fueled by some surprisingly strong GDP numbers that came out.
Okay, strong GDP, usually good.
Yeah, but what's interesting here is while that economic strength is good news overall, it actually reduces the odds of Fed rate cuts. And that can sometimes dampen market enthusiasm a bit. However, and this is crucial for LMT, we've got these really powerful geopolitical tailwinds that are driving up global defense spending. So that creates a favorable sales environment almost regardless of those economic jitters.
Got it. So let's unpack the fundamental story for Lockheed then, because based on our research, the business is just, well, it's absolutely printing money right now. I mean, look at the recent torrent of contract wins. They secured a nearly $11 billion contract just for U.S. Marine Corps heavy lift helicopters.
Huge deal.
Yeah, and their overall recent haul, it tops $20 billion. That basically locks in revenue well into the next fiscal year, doesn't it?
It certainly helps visibility, and they also blew past earnings expectations recently, reported $7.29 per share versus the $6.57 we're looking for, so strong execution.
Okay, so execution is flawless, contracts are flowing. Why isn't the stock just, soaring unchecked? What's the disconnect?
That's the core conflict, exactly. Despite all that fantastic news, the stock, well, it appears significantly overvalued right now. When we run the numbers through our fair value models, they suggest LMT should really be trading closer to, say, $413, maybe $421.
Oh, okay.
And it's trading near $486 as of our data capture, so you're paying a hefty premium at these levels.
That is a massive disconnect. If the company's delivering, $20 billion in new business, shouldn't that fundamental strength eventually just win out over these valuation concerns?
Logically, you'd think so, but Wall Street seems cautious. The consensus rating is overwhelmingly hold, and we're seeing analysts actively shifting away from buy ratings. The thinking seems to be that the market has already priced in all this excellent news. Now we're just waiting for the next big catalyst.
Right, waiting for the next shoe to drop, maybe.
So since the fundamentals don't quite square the circle on valuation, let's look at market sentiment. What are investors actually betting on? And the sentiment story is definitely mixed. On the bullish side, betting against LMT looks very unpopular. Short interest is incredibly low.
Yeah, really low.
Only about 1.25% of the float. That means very few pros are willing to short this thing. True, but if we look at the options market, which often gives clues about short-term hedging or speculation, it's actually leaning slightly cautious. The put-to-call ratio is 1.05. So for you listening, a ratio just over 1.0 means traders are buying marginally more puts bets on the price falling than calls. That's on it rising.
So hedging their bets a little.
Exactly. It's not panic selling or anything, but it is a slightly bearish hedge, putting on some protection.
Okay, interesting. Now let's pivot to the technical charts. Where is the money actually flowing? Physically. The short-term trend, it's clearly bullish. You see higher highs, higher lows, classic uptrend stuff, and it's backed by strong volume too. So money is definitely flowing into the stock, at least in the near term.
Right, but here's where it gets really interesting and potentially tricky, because the momentum gauges, they're flashing some serious warning signs. Key indicators suggest LMT is currently overbought.
Okay, what does overbought mean in practical terms?
It basically happens when a rally is so fast and furious that it becomes vulnerable to a sharp, sudden pullback, like stretching a rubber band too far. And what's more, the longer-term trend indicator, it actually remains technically bearish. So you have this massive tension, this conflict between the fast, short-term excitement and that lingering long-term caution signal.
Wow. Okay, so fundamentals strong, but valuation high. Sentiment mixed, technical showing short-term strength, but flashing overbought warnings against a bearish long-term backdrop.
Yeah.
After weighing all that, the overvaluation versus the huge contract wins, the conflicting charts, what's the final verdict from our research?
So putting it all together, our strategic outlook comes down to cautiously bullish.
Cautiously bullish.
Yeah, you simply can't ignore the fundamental strength, those massive contracts, and the powerful short-term momentum that is driving the stock higher right now. However, that caution part is absolutely necessary. We see three major risks. That significant overvaluation premium we talked about, the overbought technical signals, and Wall Street's generally neutral wait-and-see stance.
All right, so for you, the active investor listening, navigating this, what are the key levels? Where's the battlefield defined right now?
Okay, key levels to watch. Bulls really need to conquer the $490 level. That's acting as key options resistance, and it's a big psychological ceiling, too.
$490 on the upside.
Right. On the downside, the bears need to defend $470. That's currently acting as a pretty significant options floor, providing support.
$470 support. And is there an invalidation level for this bullishness?
Yes, the critical invalidation level for our short-term bullish thesis is the recent swing low, which sits around $484.50. If the stock breaks below that and, crucially, holds below it, then that nice upward momentum we see has likely stalled out.
Got it. $484.50 is the line in the sand for the short-term bulls. It sounds like while Lockheed Martin is definitely flying high on those contract wins and the short-term momentum is there, its stock price might be, well, up in thin air, a bit vulnerable to some altitude sickness perhaps. We definitely encourage you to keep your eyes on the instruments, specifically those levels. $490 cent and $470, not just the distant horizon of future contracts. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.